Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hi, this is Yazad and thank you very much for being here today. Now, Indian mid-cap stocks have been on a bullish trend for the past 2 years. From 1st January 2020 to 31st December 21, the Nifty Midcap 100 Index has given a return of 77.6% against the benchmark Nifty's 42.5% return. Now, investors who had mid-caps in their portfolio have benefited from this and made significant returns. However, if you were to look back at 2019, investors who put their money in mid-caps made losses. In 2019, the Nifty Midcap Index gave a negative return of 4.4% as compared to a gain of 11.5% in the Nifty 50 Index. Now, this shows us that mid-cap stocks can be quite volatile. However, we cannot underestimate these stocks. In a bullish trend, they can grow at a high rate and even turn into large cap stocks. Since these companies are under-researched, finding the right one to invest in can be a little tricky. But once you hit the bullseye, you can boost your portfolio returns. Today, we're going to take a look at 5 mid-cap stocks that we have shortlisted using Equitymaster's stock screener. First up, we have AU Small Finance Bank Ltd. Now, this company is primarily engaged in providing banking and financial services in India. Incorporated in 1996 as a non-banking financial corporation, it mainly focuses on retail financing. It started banking operations in 2017 and offers small business loans to micro, small and medium enterprises and other banking products to its customers. The bank serves over 2.1 million customers with a network of over 800 plus touch points spread across 15 states and 2 union territories. It has an established market position in Rajasthan, has expanded to Gujarat, Maharashtra and other states, and is evolving as a pan-India bank. AU Small Finance Bank's revenue registered a steady revenue growth of 20.8% CAGR over the last 3 years. This was on account of the consistency in the bank's overall performance in the last few years. The bank's net profit also grew at a CAGR of 45% during the same period. In 2022, the company's deposits and loan disbursements are expected to grow due to branch expansion and improved digital offerings. During the pandemic, RBI has taken several measures to boost liquidity in the country, including special long-term repo operations of Rs 100 billion for small finance banks to support MSMEs and unorganized sector entities. Now, AU Small Finance Bank stands to benefit from this as it's one of the leading small finance banks in the country with an established presence that offers last-mile credit delivery. Over the last year, the share price has seen a low of Rs 910 and a high of 1420. Currently, the stock trades close to 1300 levels. Second on our list is Gland Pharma Ltd, one of the largest and fastest growing generic injectable focused companies. Now, the company manufactures injectables used in vials and pre-filled syringes for major therapeutic areas, including anti-diabetic, anti-infective, oncology, and cardiovascular. It has 4 finished formulation facilities and 4 active pharmaceutical ingredient facilities in India, with a manufacturing capacity of 767 million units. The company plans to invest 7.7 billion rupees in capex in the next 2 years to expand its manufacturing capacity in existing plants. Gland Pharma majorly operates in the business-to-business model, that is B2B, and has long-term supply contracts with its global pharmaceutical companies. It also sells its products to end customers such as hospitals, nursing homes, and government facilities under its business-to-customer model. The company's revenues have grown at a healthy pace at about 19% CAGR for the last 3 years. Its profits have grown at a CAGR of 30% during the same period. New product launches and volume growth of existing products in key markets such as the US, Canada, Australia, and Europe have driven the revenue growth. The revenue from the rest of the world, business that accounts for 16%, grew at 136% in the last fiscal year due to increased partnerships and geographical penetration. In the financial year 2022, it is building capacity for biotech and vaccine manufacturing. The company is awaiting regulatory approvals to initiate the manufacturing of Sputnik Light. The stock really took off in the first half of 21 from around just 2,000 levels and went on to touch a high of 4,350 in August last year. Since then, the stock is down considerably and is currently trading under Rs 3,500 per share. Next up on our list is Max Financial Services, a life insurance company. Max Financial Services is a part of one of the leading conglomerates, the Max Group, and holds over 80% stake in India's largest non-bank private insurance company, Max Life Insurance. The company offers different insurance products including traditional savings plus protection plans, unit-linked insurance plans, pure protection plans, deferred annuity, assured wealth plans, and term plans. It has a market share of 11% among private insurance companies, has a record of settling claims with minimum delays, and a claim paid ratio of 99.35%. Max Financial Services reported a 17% growth in revenues in the last 3 years. Its profit also grew at 10% CAGR during the same period. During the financial year 2022, Axis Bank and its subsidiaries became the co-promoters of Max Life after acquiring a 12.99% stake in the company. Max Financial Services aims to benefit from the bank's vast domestic footprint to expand its reach. The company also plans to capitalize on low insurance penetration in the country through the digitalization of its services. Let's take a look at the stock performance over the last 12 months. The stock made a 52-week high of 1148 and a low of 715. Currently, it trades at 875 per share. Number 4 on our list is another pharmaceutical company, IPCA Laboratories Ltd. IPCA Labs is one of the oldest pharmaceutical companies with a presence in over 120 countries across 6 continents. It manufactures over 350 formulations and 80 APIs for various therapeutic segments, including cardiovascular, anti-diabetic, pain management, gastrointestinal, and cough. The company has 15 API and 11 formulation manufacturing facilities across the globe, with a manufacturing leadership of 12 APIs. It's setting up a new manufacturing plant in Madhya Pradesh for APIs worth 2.5 billion rupees. IPCA Labs revenues have grown steadily at about 13% CAGR over the past 3 years. This was on account of growth in formulations and API exports, and its profit has grown at a CAGR of 37% during the same period. In 2022, the company's revenue is expected to grow due to capacity addition at the Ratlam plant and production at its Dewas plant. Just last week, the company confirmed that trial production has already commenced at the Dewas plant. The company has consistently paid dividends to its shareholders and is almost debt-free despite its capex plans. If we take a look at the 1-year stock performance, we can see the stock is off its September highs and since then seems to be consolidating at current levels close to Rs 1,000. Last on our list is Tata Consumer Products Ltd. Tata Consumer Products is a part of the Tata Group and is the world's second largest tea company. The company has a diversified portfolio of well-recognized brands in breakfast cereals, salts, pulses, snacks, mini meals, and beverages such as tea and coffee. A few of the company's most popular brands are Tetley, Himalayan, and Tata Salt. It also offers customers a unique experience through its concept tea cafes and premium cafes in partnership with Starbucks in India. The company has a diversified geographical presence in several international markets including Canada, North America, the UK, Europe, Middle East, Africa, and Australia. Tata Consumer Products revenue saw a growth of 16.5% CAGR over the last 3 years. This was on account of higher volumes and higher realization. Its net profit also grew at a CAGR of 28% during the same period. In 2020, the company acquired Soulful and Nourished Co. to expand its product portfolio into breakfast cereals and healthy hydration space. The company's revenues are expected to grow in 2022 as the share of branded beverages is steadily increasing in the market. Being an established player, Tata Consumer Products aims to capitalize on it. Let's take a look at the 1-year price chart. The stock is down over 20% from its September high of 882 rupees and is currently trading just under 700 levels. And there you have it. We come to the end of our watch list. Here is a snapshot of mid-cap growth stocks in India from Equitymaster Stock Screener. Now, these are some of the top mid-cap growth companies based on crucial financials. But please note, these parameters can be changed according to your selection criteria. This will help you in identifying and eliminating stocks that are not meeting your requirements and give emphasis on those stocks that are well inside the metrics. Go ahead and use Equitymaster's free stock screener. So should you invest in mid-cap growth stocks? Mid-cap growth stocks have a market capitalization between Rs 50 billion and Rs 200 billion. They have a higher growth potential than large-cap companies. However, they are very volatile. There are chances these companies can grow to become future large caps and add huge value to your portfolio. But there are equal chances for them to drag down your portfolio returns. They are sensitive to market movements and react to good or bad news. However, these are stocks that one cannot miss and are often considered hidden treasures. Mid-caps help in diversifying your portfolio, and they have the ability to boost the portfolio's returns in the long run. Investors with a high risk tolerance and a long-term investment horizon can consider adding these stocks to their watch list. But before investing in these companies, assess the fundamentals and valuations of the business. That's all for this week. Thank you very much for watching, and don't forget to hit the subscribe button and to come back next week for a new and awesome video. This is Yazad signing off. Happy investing. Goodbye.